time to get some common sense from Craig. With the debate over the debt ceiling raging in D.C., Craig Bolanos is here to explain what it means for your money. Craig, what can you tell us?
Well, the debt limit, commonly referred to the debt ceiling, well, that's the maximum amount of debt that the Treasury Department is authorized to borrow to pay our already committed financial obligations. This is an amount that gets set through Congress. And by the way, it's been raised 78 times in the past 63 years. The most recent time we raised the debt ceiling was back in December of 2021. So why is all this in the news today? Well, on January of this year, specifically the 19th of January, the debt ceiling limit, kind of came back into focus because we hit it. And what that means is the U.S. Treasury is going to have to take time to start shuffling monies around, potentially suspending certain programs until such time the Congress can really work together to find a pathway forward to a resolution. How much time do we have to wait for that resolution? Until this summer, July of 2023.
Craig, I think people are really worried this time that Congress will not extend that debt ceiling, and as a result, the U.S. could default on its debt obligations. What will that mean for Americans and America?
Well, Angela, that's a lot. Is it true? Yeah. Could it happen? Sure. What does that mean? I don't know. It wouldn't be anything good. Let's unpack all of that. So, it is true that if a compromise isn't reached, then the U.S. government technically would default on some of the contractual obligations that we have eventually. The government's going to have to essentially pick and choose what programs to pay for, what programs to shut down for a period of time. However, I think it's important to note, and I want everyone to lean into this, the debt ceiling debate, again, has actually occurred 78 times in the past 63 years. And there's not any reason, seriously, there's not any reason to believe that cool heads won't ultimately prevail. And we'll look back at this and say, oh, we raised the debt ceiling for a 79th time in 64 years. However, we have learned that playing brinksmanship, waiting until the very, very end, presumably July of this year, to reconcile, well, that can be dangerous. We learned about that in the spring of 2011 when the U.S. went from being AAA rated, that's a credit rating, to AA+, that's a downgrade. So what's the bottom line here? Angela, the bottom line on the entire debt ceiling is this. I think as citizens, we all need to recognize as a country, as a society, heck, as a community, we have to actually balance the spending long term. And just as you can't borrow money for retirement, we can't continue to borrow an unlimited amount to pay promises to each other that we can't fiscally afford. What's the bottom line as investors? Well, I think everybody should be vigilant. This is newsworthy for a reason, and there are going to be some potential headline risks that could be caused by the very thin razor margins, majorities those are, in both the House and Senate. And what could that do? It could create for some volatile headlines. And if so, I think it's going to be an opportunity for investors who are positioned correctly, just like it was a fantastic opportunities for investors who positioned correctly back in the spring and summer of 2011. I'm Craig Bolanos, the CEO and founder of Wealth Management Group. If you'd like to learn more, you most certainly can. Go to our website, investwithwmg.com.
Go to businessfirstam.com for where to see our show on TV.